Yeah. Noam, welcome to the InsurTech Talk. How are you doing?
Thank you so much. I'm really excited to be here. Thanks for having me.
And we'll actually start with one of the most fascinating facts that I saw while, doing my small research before this episode. So, you were a soccer referee. That's how
Yes,
you
I
started your
was.
career.
Well, I started small with like the youth, youth groups, and then moved my way up to Liga B, Liga Gimel. There were a few incidents that kind of stopped. Soccer in Israel is a bit aggressive, so like my career was delayed at some point. But it's a really good
Okay.
experience. I did it, all the way through my military service. So
So you were there for a few good years.
yeah,
So today you are a general partner, you are a GP at Viola Ventures. We are talking about
Viola
the
FinTech.
fintech one, Viola
Yeah.
FinTech. It's a big group. Tell us, the origin story. How from, at high school at the age of 16, doing soccer refereeing, how did you become a venture capitalist? What was the
You know
journey?
what? It's so random. I mean, let me tell you, I didn't know what 8200 was till I was like 26. I grew up in the north of Israel. I come from a military family. My dad was a general in the army. Everybody in my kind of close community went to combat service. And so I really had no idea. In my school, we didn't even have like computer science and that stuff. I, went to high school in a kibbutz. So it was, very different from kind of my current community. I moved to Tel Aviv. At that point, my dream was to work in marketing. I started very young. I, worked full time, during my undergrad. And so by the time I graduated, I was already like working for a retail company in a marketing role. And then shortly after, I worked for what was then the largest telco in Israel, Orange. And kind of that's where I was exposed. I did a few marketing roles, and my head was constantly going to new ideas and new things we can do. And long story short, I ended up like doing an internal venture. We started a marketplace, and this is like back in maybe 2007, 2008. So like there was no e-commerce in Israel. And by building that marketplace, I got to know the e-commerce world. I got to deal with payments and kind of hands-on build something. And then I was, PayPal was just opening an office in Israel, and they reached out to me. I thought they wanted me to put PayPal like as a payment method on our marketplace. I didn't, it's very naive at the time, right? Long story short, I, moved over to work for PayPal, and that was my first tech job ever. That's where I fell in love with the startup world. I fell in love with fintech. It wasn't cool at all back then, so it was people were kind of didn't even know why I like it so much. Um, but I guess that's how I kind of found myself in the tech world. And in PayPal, I got to meet a lot of startups as part of my role. And so at some point, I decided that if I want to get serious about doing this and being in this world, I need to work for a startup, right? Because a corporate job, it's nice, it's cozy, but there's so much you can't learn there. And so then I moved to the first startup I worked for, which is Zoos. Like you mentioned, I think I was like employee number 6, 5, something like that. And yeah, it was a really fun experience. And I mean, at PayPal, I was also doing like a business development go-to-market role. So I kind of went over to Zoos and led that go-to-market, business development motion there, and kind of gave me this new perspective, um, and I loved it. And then I
Hmm.
moved to work for Forder uh, in the fraud prevention space. And Forder was really like I fell in love with the company. I was also there, part of the core team, employee number 10, also leading like all of the go-to market in the beginning and the kind of business activity. And Forder for me was like an amazing experience because I got to experience how you feel when there is like true product market fit from the beginning, right? There is perfect alignment between, what we saw, what the customer needs, the business model that kind of aligns everybody's interests. And you could see in every conversation, with the largest corporations in the world, and we were this tiny startup from Israel, but you can see them just like opening their eyes whenever we talk about the product and the solution. And it's like enterprise sales, so it doesn't ramp up in a day, obviously. But I think
Hmm.
I can't remember many people we talked to that like didn't get it, or um, so that was a lot of fun, like building the whole kind of positioning and telling the story and going out to the market.
People, especially the young ones, in the beginning of the career, always wonder how do you go, how do you join a venture capital?
So first of all, let me clarify. I'm an operator by heart till this day, right?
There is no
And
shame
for
of being
me,
an investor.
no, I know, but like for me, the way I perceived venture capital was you have a nice office in Serona, you have coffee with a lot of people, you go to events. This was like, oh, that's a great job for my retirement. And I'm not like, I have a few years till I retire. So it's kind of, and I got there, almost accidentally. It wasn't like a planned thing. And then, of course, I discovered how wrong I was about the whole notion of what VCs do. But like after the startup experience, I took a corporate job. I started Oracle's startup activity in Israel, and then in a few other regions. It was called Oracle for Startups, and we worked with a lot of VCs. We had an accelerator. We had different programs. Um, then I went and worked for a Mexican private equity and led the global transformation there. It's the company that owns the Netafim, if you know it. And after that, like it was COVID, I wanted to return to Israel. I kind of didn't want to work. I worked mostly across Mexico and the US. I wanted to live in Israel. Um, and I didn't want to like work from home all the time. And at some point, I got connected with the Phoenix, which is the largest insurance company in
In
Israel. This
Israel?
was like 20, yeah, this was the 2020. Everybody was talking about fintech. Everybody was trying to do things, in fintech. Capital was like very abundant at that point. Long story short, we ended up like partnering together and building a small early stage fintech fund with the goal of like baking in industry expertise, operational experience to create a true Israeli fintech fund. At that point, there weren't really that many. Um, and so that was actually my first step going into the venture world, which was also very operational, right? It's like it's an
Hmm.
entrepreneurship. It's starting something new. um, and so yeah, that was how I went into the venture world. Like my first time doing investments was like starting this fund, running it. I had done investments before as an angel, so I've been investing as an angel for a few years, but not anything like institutional. And then yeah, I met my partners. Like we decided not to continue with this format due to all kinds of changes in the market. I met my partners at Viola FinTech. We were dating for about a year, and then we decided to kind of partner on Viola FinTech too. And I'm like extremely happy that I joined. Viola is an incredible group with so much love for fintech and InsurTech, and also so much experience in investing. So it's really been a good home for me.
Let's talk about Viola FinTech and Viola Group a little bit, so people will know who
Yes.
and what we are dealing with. The group, how many different funds you are? Are you at Fund 2, Fund 3? What's the investment appetite?
Okay, so Viola Group is the largest investment group in Israel, like tech investments. As you said, the group has 4 main strategies. 3 of them are equity, 1 of them is debt. We have 2 funds that do, one of them does early stage and 1 of them does growth in Israeli related companies, generalist investors that do a lot of fintech and insurtech as part of their thesis. And then we have Viola Credit, which is a debt fund, a global debt fund. And Viola FinTech is the only fund that's like by definition global. We invest some in Israel, but our main focus, I would say, today is the US. We used to do Europe in the past. So that's it. We invest pretty early stage, like seed extension, A rounds. That's today our sweet spot.
Range, check sizes?
5 million for first check.
Okay. So that's kind of the average. You have a range around it. Really fits.
Yeah, exactly.
So what's the contextual FinTech?
So basically, contextual fintech, and this is a pretty old article, but at that point it was like super timely. But it takes the concept of embedded, right, where it says, okay, let's take a distribution platform, let's take a product, let's connect them, and just like bakes in the notion of user intent and context, right? Because in the article I differentiate between businesses of like let's go and sell banking services within a retailer where you're not necessarily looking to buy like financial services when you go into a grocery store with kids, and so the moment of intent is not necessarily there, versus maybe to name an example from our portfolio company, like INSHUR provides insurance, auto insurance, for rideshare. And they deliver the experience or the product itself within the platforms. For example, Uber, right? So as I'm onboarding to become an Uber driver, that's the exact moment that I want to decide about insurance, right? It's very contextual, it's very timely, and that makes it a perfect fit of a distribution strategy and a customer experience, right? Which was kind of lacking. If you look at the basic concept of embedded, it talked mostly just about the distribution and kind of low CAC and all of that, without really thinking about the user journey.
Travel insurance in the airlines, that may work, but does it, right? Because you can buy a ticket for a show. Yeah, it's just a checkbox, I'm covering this. Will I ever read the small print? Not so sure. But when it comes to, I need to make sure to have a home insurance. Will that work? Will that be the best solution for embedded insurance?
Yeah, I think like everything, right? It's not a one size fits all. And I think to your point, like there are places where it works much better. Probably those that are like not as complex of decision as like, taking a mortgage, home insurance. Those things maybe might seem more complex than auto insurance, for example. But I think, you're right. It doesn't work everywhere. I think actually back then when I wrote my thesis about that, we did this map of startups according to this concept. And actually, InsurTech was, the one space that had a lot of, we've seen a lot of examples in InsurTech where it's sort of working, right? Whereas in other places in FinTech, some better than others.
And how does it connect, from all your experience in fintech, you have a nice portfolio of insurtech companies. How does it reflect to your thesis towards the insurtechs?
So specifically, our thesis in the insurance world, right? And this is, let me just say that we're facing so many changes in the market with AI, and it's really a constant battle, right, to figure out where the real value is and where there is a defensible moat. The nice and not so nice thing about AI is that it makes everybody look great. Everybody's, an amazing storyteller. You can get behind almost anything you see. But then it gets really hard to understand where there's real value. So we look at insurance kind of in four layers, where the very basic foundational layer is capital. And while that's, again, the most foundational, essential layer, that's not a place where, new players are going to play, because the barrier to entry is very, very high. And so that's kind of, we can leave that one out of the discussion. Then, one layer above it is underwriting. And underwriting historically has been the place where InsurTech startups go to, right? Like using technology for underwriting. Today, with AI, that's being totally commoditized, and it's really hard to create something defensible there. With some caveats, and then above that we have distribution, and above that we have trust. And so we're kind of looking at value that's migrating up to the kind of top layers. When we talk about trust, it's you can see trust one time is, when you buy the insurance, am I getting the right offer? Is this a good deal? Is this right for me? And then when you make a claim, right? Can I trust this brand to support me now at the moment where I need it? So I think the concept of trust is really interesting and really hard. It's like a very scarce asset, right? It's not something, you can rent capacity, right? You can rent capital. You can hire people that do underwriting, but trust is like this thing that you can't really, it's very hard to get it if you haven't built it, and that's what makes it super defensible.
No, it's a part of the intangible assets that a company has, and it takes years, if not decades, to build trust, especially here in the US, actually everywhere, right? It's, can we trust the brand? When we see the brand, what can we trust it? Does it mean? And it's easier, needless to say, to break that brand. And this is also the main reason you ask, why insurance companies spend millions, right? Actually, the bigger ones have a marketing budget of more than $1 billion. Geico is famous that almost 10 years, it's getting to 10 years ago, they had a $2 billion marketing budget. Why? It's not just brand recognition, but you need to maintain it and keep it there to make sure that you like that gecko that presents Geico. Yeah, that's kind of the biggest challenge that they have. And
and again, trust is like, it's an holistic concept. It's not just your brand awareness. Like, you can spend all that money on, brand, and then if the experience the person has with you is not good, they're never going to trust you again, right? So it's and I can say something that's maybe a bit controversial, right? But
please do.
Investing in InsurTech, there is this kind of obsession about loss ratios, And loss ratio is the number one, thing that investors look at. And don't get me wrong, it's extremely, it's extremely important. I'm not saying, I'm just saying it's like it's necessary. I don't think it's necessarily enough. Like those two concepts of, distribution and trust sometimes don't really get underwritten in the same way, because loss ratio is very easy to measure, right? It's a number. It's really hard to put a number or something like very empirical on, the level of trust this brand has, or do they have a distribution mode that other companies don't? So I think it's just like an interesting concept to, you know, to look at those as well.
That's actually a very interesting test to do. What does it mean to test trust in an insurance brand? Because, loss ratio, combined ratio, those are industry KPIs. That's what the regulator requires. But how do you keep trust? Does it mean that after a claim you give them a second chance? Any other conversation, we need to touch AI. So you kind of mentioned that AI is turning underwriting to a commodity, or maybe I misheard you.
Yeah, I think, well, again, there's some areas, you and I talked about cyber insurance. I think cyber insurance is a great example, right? This is an industry where incumbents didn't have enough data. So you had InsurTech companies coming in to basically underwrite a new risk through technology, right? Now, fast forward, there's data, incumbents, want to get a piece of this pie, maybe, kind of cutting back on capacity. It's not a new risk anymore. Now it can be, it can be underwritten more easily, or there are more tools for, to underwrite it. We're seeing consolidation. We saw the great announcement about AtBay, which is an Israeli pride. It's still nice. Just listen, given all things considered, I think it's a pretty nice outcome.
Ask the investors at Series D and maybe the investors in Series C if they are happy. I don't know. I just read public information. I did my own reverse engineering and tried to be nice about it.
No, I did the same.
That's all I can say.
Trust me, I did the same. I'm just saying, I haven't seen recently too many deals where the entire cap table was extremely happy, right? It's kind of, been a while, right? So, so I'm saying all things considered, some people are happy, good outcome for the founders, I'm sure. So,
yes, good for them. Yeah. Folks who are not familiar with the AtBay sell to Munich Re. AtBay, it's a it's a cyber insurance with a cyber security services.
Yes.
They started as an MGA. They acquired the carrier. The carrier result is they also bought another company, Relay, at a certain point and kind of shut it down later on. Their last fundraising was at 2021 when they raised about almost $200 million. They had a Series D and then a little bit, $20 million, a little bit more. So it kind of put them at the $200 million total, almost $300 million. And that was at a valuation. So again, 2021, right? That put them at a valuation post money at 1.3 billion or something like that. And so that was 2021. And that was the last time one of the investors invested. And that's where it was. So 5 years later, now they sold at almost half that in terms of the valuation. So in terms of the last investors, 5 years, maybe they are even, but we do the calculation always at, okay, what's the IRR here?
You and I both know also how many people that invested in 2021 didn't even get their money back. Right? 2021 was a rough time, right? We were in the middle of a bubble. It's that's what I'm saying. All things considered,
yes,
not bad.
Most definitely.
And is there a moat, right? So cyber insurance, it's not a new risk anymore. But if you look today at all of the new, evolving risks like AI, liability, and everything that has to do basically with AI, this is kind of, the new cyber insurance, right? This is a new
Mm-hmm.
risk that needs to be underwritten with the help of technology, with expertise. So that's an area where I feel in terms of underwriting, you could get a moat because it's a very new risk. In other places, where it was kind of, oh, well, we do the model better and, we're in these best units in the army, so we know how to calculate and, we now know how to price risk and all of that. I think those areas kind of AI really makes them commoditized.
How about your work? Did AI make your work easier or harder?
Uh,
Because everyone
I
is, we
mean,
are AI something, which nowadays I just call bullshit. And they need to really
yeah,
define what AI something you are. Are you an LLM? Are you just a rapper? Or what's the business?
I would say that generally it made my job more challenging. I mean, yes, on the day to day, we use tools. We don't handle
Mhm.
the kind of nitty gritty as much as we used to. So it's kind of that made it easier. I just think whatever is going on with AI just made me look at the concept of founders totally different. Because I mean, I'm sure every investor you interviewed on this podcast, you ask them what's the most important thing to you. Everybody would say team, right? But the
No,
concept of
no,
what
not
are
at
you?
all. Only in the early
Okay,
stage, that's a thing. The more you are, and then
yeah,
there is a mark. Once you reach a product market fit, it's less about the team. The team is
yeah. I was
super
referring
important, but
more
not
to
like
more to like
number.
earlier
Yeah.
stage. Yeah. But even the concept of team, right? What are we looking for in a team? And I think today, for me, the importance of leadership capabilities, resilience, flexibility, like keeping an open mind and being able to adapt with the market and take risks and move fast. These are things that are very, very hard to evaluate, before making an investment. And today, seeing, even in our portfolio, some companies have adapted so fast and moved, to these different directions to kind of meet the new reality. And some of them were struggling with, with that. It took them longer. And I think that's like something today when I'm meeting founders, I want to know more about their leadership capabilities and kind of their resilience. And yeah, it just gets more and more difficult to find a very defensible moat, especially in fintech and insurtech, right? It's a long journey if you want to build something meaningful and not an AI wrapper, to your point. It's regulation, it's a long story. It's not a like 2 years let's sell this, right? You have to be in it for the long run. So not all founders have that appetite today. But I
Let's.
think that this is like one question that you can't answer with Claude, right? And so this is where in
Oh,
venture capital, like your experience, your kind of ability to analyze people, operational experience like with having managed, teams. This is where it's very hard, it's a very kind of elusive concept. It's very hard to explain it. Some of it is intuition, right? We're not supposed to say that we use intuition, but we do, so these are like things that
gut
are very
feeling plays
vague
a lot.
data points that have
Mhm.
to work in our human model. So without an LLM, we have to deal with it. So
And you actually said something very, very, very important early on that early stage entrepreneurs don't really understand that, you know, you mentioned that it took you about a year to date your business partners because it is a marriage. You get into a fund, you have 8 to 12 years of business partnership here, which to get out is sometimes more difficult than to get out of a marriage or other examples. Now, you have entrepreneurs who expect you, oh, I created a beautiful deck, and can you give me $5 million or 2 million? It's like, You want $2 million after a presentation or 2 weeks of back and forth and basic due diligence. Are you going to give someone $2 million just because you met them and they did a beautiful presentation without Claude design, with PowerPoint or Canva or something like that? No, it doesn't work this way. There's a certain, everyone has a certain, and you mentioned, especially early stage, it's all about the team. We need to date
Yeah.
first. We need to know
Yeah,
each
this
other.
is
Yeah.
a great point, and I think this was part of the things that were so wrong in the 2021 kind of thing, because it was so competitive. Founders were expecting to get a term sheet within a week or two. Everybody, you had these funds that are giving term sheets in 24 hours, 48 hours, and you really couldn't know the founders, even the market, or like it was almost like lottery, right? You didn't have the ability to get to know people and get to know the business in the way that you needed to. And I think that was maybe the origin of some of the like not great outcomes.
Credit, the only thing that they want to see is to get their money back plus the interest. That's the only thing that they care about. They want to make sure that you have cash flow. They want to make sure that there is hard asset or something that will collaterate. Vision is wonderful. The creditors don't enjoy the upside. They enjoy the very fixed interest against the risk that they underwrite you against. But think about, I'll use the AdBay example. The early on investors at AdBay did at least 20x on that investment. They've done very well, the early stage investor, because they saw the future, they saw where it's coming, they believed in the vision and where the company can go. But again, this is me getting too much into that specific thing. We can go back and talk about AI, or actually give a little bit of love to your portfolio company. Tell us a little bit about your portfolio company. Who should we pay? Well, you cannot differentiate. We love all of our kids the same.
Yeah, so maybe let me just shine a spotlight on our most recent investment in a company called Advance in the InsurTech space. And this is actually a great example. We're big believers in infrastructure, and Advance is kind of operating in the insurance space without underwriting a single policy, but still it has like very high defensibility because provides the rails for money movement
We'll give
and
a shout out to
enables,
Omer.
yeah, to Omer and the team, Omer and Gal, and they're basically giving MGAs and brokers and wholesalers the financial operations tools, and basically creating the ramp for the insurance industry. So I think it's kind of a combination of fintech and InsurTech. Really great team, doing very well. So we're excited about that one.
What's next for Viola?
Good question. It's we have to also stay just like we're looking for founders that are super flexible and kind of adaptive. We try to be the same way. The market is, we're going through a revolution right now, and a lot of people are a lot of stakeholders are, waiting to see how things play out. We see it in different places. And so, yeah, we are, constantly on the lookout for amazing InsurTech and FinTech companies. We're also kind of looking at different directions as well. We're, trying to explore different business models, actually playing around, with the concept of AI roll-ups, specifically looking at the insurance industry. So we haven't done anything yet, but it's definitely something we're interested in and kind of exploring as a new business model, or newish business model. We like niches, again, as a relatively small fund where our sweet spot is in those places sometimes where you serve the niches in a very good way. So yeah, fintech and healthcare is a big one for us. We did defense fintech, which is all the kind of compliance related topics. We're looking at really very broadly and changing all the time. We develop our thesis on a quarterly basis, pretty much, like reevaluate them and expand them if needed.
So sadly, we are reaching the end of the episode. So let me ask you the question I ask everyone at the end. What is something the insurance industry should be talking about more that is not talking about enough?
That's a good question. I think, again, people are talking about it a lot, right? It's not that I'm inventing anything new, but I think for me, the intersection of distribution and trust, like I mentioned, I think is something that is being like AI is disrupting that whole thing and opening up a lot of new opportunities to do things in a different way. I think some companies are talking about it. There is a lot of potential there to find interesting things to do.
Noam, thank you very, very much for joining me on the show, on InsurTech show. I appreciate your time, your knowledge, and of course, your wisdom and fairness as a referee.
Thank you so much. I really enjoyed it and really appreciate the invitation.